Meantime, new data today showing signs of easing inflation as the White House is pushing for more spending on COVID funding during this lame duck Congress. The Fed has said spending is the headwind of the inflation fight. Joining me now, Chief White House Budget Office economist under Trump and Young Americans for Liberty Senior Fellow Vance Ginn. Good to see you, Vance, and thank you so much for joining us. There is some optimism in the marketplace right now. The feeling is inflation numbers are coming down. Maybe the Fed doesn't have to be as aggressive as once thought. But the longer this takes, the more it does hurt the American consumer. I see trading down as a good thing for Walmart, but not necessarily a good thing overall. And having said that, Americans are in more debt than they have ever been before. According to the New York Fed, for the third quarter of 2022, $16.5 trillion in household debt, and credit card balances are the largest that we've seen in more than 20 years. Your thoughts?
Well, there's a lot of ways to spin this. I know the Biden administration will like to spin it that this is good news, that inflation is up only 8% for the PPI, 7.7% for the CPI. But this is all reducing the purchasing power of hardworking Americans across the country. And at the same time, they're wanting to spend more, put us further into debt. We just can't continue to go down this route. We've really got to turn back to cutting the balance sheet by the Federal Reserve and pro-growth policies that will allow for hardworking Americans to be able to get their feet back on, be able to afford goods and services that are all around them and to thrive.
I hear you, but that doesn't necessarily seem to be on the agenda. President Biden, of course, after the midterms, speaking at the White House, I believe it was last Wednesday, and essentially doubling down on the policies that he currently has in place.
Well, that's exactly right. And the things that we've seen so far over the last 2 years, 40-year high in inflation, 20-year high in mortgage rates. If you go through and you look at how there are millions of people that are out of the labor force compared with just right before the pandemic, these are not good signs for the overall economy. And even if you look at the third quarter GDP numbers, if you exclude the net exports, it was a decline again. We've had 3 quarters of declining real economic output when you look at the domestic economy. This is not a good sign, and it's unfortunate that they're wanting to continue these failed policies of the past when they really should go a different direction if you look at what happened in the elections.
Yeah, and that's interesting. That's an interesting point. What are we expecting in 2023? Most people, experts on Wall Street, even some of the big CEOs are forecasting some sort of recession. It may not be as deep as previously forecasted, but slowing growth, right? And you're talking about the GDP numbers that we've seen here already. I look at the stock market, and I know you're not a stock market expert, but I see people, pouring money back into it. And I'm wondering, what are they thinking regarding growth? Because I don't seem to, see the same picture.
Well, I think what they're doing, Jackie, is buying some on the dip, right? And they see that inflation looks lower than expected. It looks like maybe the Federal Reserve won't have to be as aggressive. And so that gives them more profitability for the future to buy more of those stocks.
Yeah.
However, I think the Fed's going to have to be more aggressive. They're going to have to start cutting their balance sheet because even though things are a little bit, inflation is moderated, it's still high. We're still looking at 40-year highs. That's not a good sign. I think there's more inflationary pressure when you look at core, excluding food and energy. It's still hot. It's still over 6%. If you look at energy, it's up over 21% in PPI. So there's a lot of underlying inflationary pressures that I think the Fed's going to have to do more. And we need Congress to actually do some pro-growth policies. I know they're unlikely to right now, but we've got to be turning in a different direction quickly before we go further into a recession.
I hear you on that, and the hope was that at least we would have the House. We're still 1 seat away before it's called. But having said that, at least some of the spending that contributed to this inflation might be able to be avoided moving forward. So we'll see if that helps. Vance, good to see you. Thank you.
Thank you.